This is the briefing for Friday, December 12th. Well, during the week, this week, I've been talking about the rotational pattern that the stock indices have been in on a short-term basis. And you can see that right here. This is a 60-minute chart of the spiders, the Qs, and the IWM. And you can see the rotational pattern that's been going on for maybe a little bit over a trading week. With an upper extreme on the spiders right around 688 and a lower extreme coming in right around the 681 area. You see the same thing with the Qs and then of course the IWM and the intermarket divergences I've been covering during the week as well. And you can see basically what happened in today's trading. You can see that the Russell was stronger after the Fed announcement than any of the other indices. And of course, the NASDAQ was showing more weakness after the Fed announcement than the other indices as well. The spiders were basically in a holding pattern, I think anticipating what the other two indices were going to do. But today's trading, we had a sell-off. Kind of interesting because Broadcom's earnings came out and they were better than expected, and their guidance was better than expected. But we did get a sell-off, and it was a pretty significant sell-off because it took us from the upper extreme and a potential breakout to the lower extreme and a potential breakout down there. Now you can see these buying wicks, these buying candles on the on each candle here. That represents buyers who stepped in and stopped the selling. Stopped the slide through this key reference area. So that makes this really, the 681 area, really a very important area, because you can see even going back here, buyers stepped in and stopped the slide. We had 3 instances in 3 hourly candles where they tried to take it lower, sellers tried to take it lower, but buyers stepped in and stopped it from sliding. A little bit different in the Qs. Broke out to the downside and broke out on an impulsive move, as you can see here. High volume at the open and through this entire hourly candle. Then volume fell off during the rotation, and you can see that buyers stepped in here also. You can see the buying candles that the buying wicks that occurred here also. Russell still showing more strength. It broke out above this 253 area. But it has come back to retest that area, so it's going to be interesting to see how that is reflected. Now, one of the things, I mean, you can see breadth was pretty, was not pretty negative, but it was only negative 61 shares in the S&P 500, so that's really not that much weakness there. Weakness in the NASDAQ was pretty significant. That's 1,800 shares negative. And not really bad move in the Russell also. The Russell breadth was negative, about 550 shares. What was really concerning me during the week was what was happening with net volume, and I want to spend a little bit more time talking about that. So you can see net volume here was falling off, and it really was not that strong. While volume was strong during the volatility period of the Fed announcement and the press conference, you can see that net volume was not that strong and then fell off pretty dramatically today in the NYSE. And this is in the NASDAQ, so you can see the NASDAQ net volume was pretty signaling a pretty much weakness in the market. Same thing with the Russell net volume. So when we had these rotations up and we were looking for potential for a test of the upper extreme and a potential breakout, when you have more shares that are trading, or more volume that is trading to the downside as opposed to the upside, it's pretty hard for price to continue in that realm of development in terms of this rally that we saw going back a couple of days. Now, looking at where we are in terms of the longer term picture, it's a daily chart. This is really very interesting to see this rotational pattern that has been going on for quite some time in the spiders. And then you can see this several days of rotation that I showed on the hourly chart at the upper extreme. Now, it is typical to see a pause when a market or a financial instrument reaches a extreme, whether it's a resistance area or a support area, because traders typically step back and try to determine if there's enough strength to see a breakout move or not. But you can see that we tested this upper extreme for several days, unable to break it out, and then we get this candle that is a sell-off candle that we saw in today's trading. Volume increasing in today's trading. It increased yesterday also on this move up that looked like we were going to see a breakout in today's trading to the upside, but that was completely reversed. Volume stronger in today's trading. 52-week highs minus 52-week lows, down slightly, but still not very negative. It's in fact, it's still fairly positive. But you can see what's happening with market breadth through this whole rotational pattern here. Market breadth was declined even today, and then you can see there's a decline in net volume as well on a daily basis. Looking at the Qs, you can see rotational pattern here and through here, false breakout, rotation all the way back through the range, and then of course this rotation up, the pause, this like we saw in the spiders, and then of course the sell-off in today's trading. Now, important to this is that this area 615 was the lower extreme from this area of rotation, which puts it back into this area of rotation. And we did close below that 615 area. So that's pretty significant. Now we can always maybe see that this is a false breakout. And we'll see that in Monday's trading. If it is, we'll see a rotation back up again. But there was a pretty good amount of damage that was done in today's trading, especially in the NASDAQ. See volume increasing in the Qs, and then of course NASDAQ breadth declining and net volume declining pretty dramatically through this whole period in the NASDAQ as well. And I'll get to the volume, the total volume numbers in just a few minutes. And they were pretty significant as well. And then of course the Russell, you can see a false breakout to the downside. Question is this a false breakout to the upside? This area of the 253 area, really important area now for the IWM. If it's broken through, then we have to expect rotation back through this area once again. Volume increasing over the last 2 days, increasing even more in the down move to retest support. And of course, you can see breadth was declining through this whole, or trending down, I should say, through this whole rally period right through here. And of course, net volume declining as well. Looking at where we are in terms of overbought and oversold, you can see we're basically neutral. The NASDAQ, this is the NYSE, the NASDAQ is approaching an oversold condition, but it does not preclude the market from going lower on Monday. The first hour of trading is going to be the most important, and the key reference areas that we just looked at are going to be extremely important, because if they're broken on a shorter term basis, these areas here, if we trade much below there, just like we did in the NASDAQ, that's going to suggest then that we're going to see some type of a longer term rotation back to the downside, such as this through here, and trading all the way back down in the spiders to the 650 area. So that's going to be very, very important what happens on Monday to see if they take it down, or they take the other two indices down, the spiders, or the S&P 500 and the Russell. In terms of total volume, and this is probably the most significant, this is total volume on the NYSE, and you can see we had some spikes. This was a result of the Fed announcement this week. But you can see volume in the NYSE was basically flat. If this red line is a 10-day exponential moving average of volume, so you can see it's basically in line with trend. But you look what's happened with net volume. Now, yesterday we did get a spike up in net volume, but the average of net volume is declining as well. And probably the most significant is this is NASDAQ volume, total volume on the NASDAQ. So you can see that it was trending up, and then as it was trending up, you can see what was happening with net volume. This was a pretty clear signal that I discussed in several of the briefings that something was not well, especially with the NASDAQ. And if the NASDAQ wasn't well, then the question is, would it fall over into the other two indices as well. But we got a decline in volume. We got a spike up in net volume, but then the trend in net volume is down once again as volume begins to increase and come back. So this was a pretty clear signal between volume and the breakdown of volume in net volume in the NASDAQ that suggested there may not be much health in the indices, at least at this point in time and coming into this area here. So watch this area on Monday, this 681 area in the spiders. Watch 620 in the Qs to the upside. That's resistance now. It was support, it is now resistance. And then watch this 253 area in the Russell. If that's traded through, we're going to see rotation back through this range. If they all start trading together to the downside, we could be looking at longer term key reference areas and potentially even looking at the spiders hitting this 650, 651 area before it is over. Have a great weekend, and I'll pick this back up on Monday for subscribers.